Are you loving it? McDonald's certainly hopes so, as the fast food giant undergoes a period of restructuring and menu changes aimed at improving its offerings. But as with any company, it hasn't been all smooth sailing for the Golden Arches. Let's take a closer look at some of the challenges McDonald's has faced recently. One of McDonald's recent moves was launching the Adult Happy Meal promotion in 2022, which tapped into nostalgia and appealed to an older demographic. Despite being underprepared and facing criticism for long lines and shortages at some locations, McDonald's reported a strong global sales growth of almost 11% in 2022, with sales in the US climbing almost 6%. The company's CEO is now focusing on streamlining the menu and enhancing the flavor of their top-performing burgers, which has contributed to their recent success. In fact, on April 25th, 2023, McDonald's reported quarterly earnings and revenue that exceeded analysts' expectations as US consumers continue to buy Big Macs. The company's US traffic rose for the third consecutive quarter, bucking the industry trend of slipping traffic as menu prices rise. The first quarter report for 2023 exceeded Wall Street expectations, much to the delight of shareholders, with both earnings per share and revenue coming in higher than projected. All three of McDonald's divisions, US, International Operated Markets, and International Developmental Licensed Markets, reported same-store sales growth of 12.6%. McDonald's Corporation is good value based on its price-to-earnings ratio compared to the peer average. Yet, looking at its share price versus fair value, we see that it trades above analyst estimates of fair value by more than 60%. The analyst consensus forecast for the next 12 months is that the stock price will increase by almost 4%. The company has recognized the need to adapt to changing times and simplify operations, which has resulted in layoffs and office closures. Despite challenges beyond its control, such as the closure of all its restaurants in Russia due to the Western backlash over the country's invasion of Ukraine, McDonald's remains a staple of the fast food industry, with over 60 years of history and an iconic brand. Looking to the future, McDonald's plans to open 900 new restaurants in 2023, almost half of which will be in China. The company is embracing digital delivery and adapting its menu to cater to Chinese consumers. McDonald's is also leaning into its franchise model to cut operating costs. In 2017, it sold its China business for over $2 billion, while retaining a 20% stake in the business. Another recent move by McDonald's is the opening of a new restaurant in Texas that's mostly run by computers. Customers can order through either computerized displays or app and pick up their food from a machine, eliminating the need to interact with anyone. While some have criticized the move, arguing that McDonald's should pay its employees a livable wage instead, automation can actually create new jobs to replace the ones it eliminates. Additionally, McDonald's is investing in its employees by offering training and education programs to help them advance their careers. If you're considering investing in McDonald's or other companies, our platform offers a hassle-free method to do so. Simply scan the QR code presented on the screen or visit the link provided in the description. However, please be aware that we do not provide direct investment advice or endorse the purchase or sale of any company's stock. We only provide a user-friendly way to invest in different firms, but the final decision to invest lies solely with you. Whether you're craving a classic Big Mac or some crispy McNuggets, McDonald's is always ready to satisfy your fast food cravings. So go ahead, treat yourself. And if there's a long line at the drive-thru, just remember that the demand for the Adult Happy Meal was nothing to toy with. This has been the Investment Brainstorm. Thank you for joining us. And if you found value in the video, please like, subscribe, and share it with others. See you next time.